Hello and good morning, neighbors. Welcome back to the neighborhood. I am Squealer D and I am back again. And this time, neighbors, we are back in the beautiful world of finance, learning about other risk management factors and how to cut our losses, guys. We are still working on. Oh, one second. We are working on whether or not we will survive. Survive. It will probably be a sore experience at the beginning. We might bumble along a little bit and get some bruises, but we will do this, guys. Today is day number 21. If you are just finding this series, welcome, my friends. And I hope that you stick with this and change your life like I am about to do. Like I said, this is day 21. All of the other days will be in this folder called, it's a playlist called Stock Market Learning. And it should have everything in there for us to learn the stock market. We have not gotten deep in, guys, so this is a perfect time to start. If you are just starting today, you are in the right place. If you are young, you are in the right place. Anybody can learn this, any age. I am teaching my 11-year-old daughter. Well, she's about to be 12, so I guess I will say my 12-year-old daughter. But you can learn this. This is not stuff that people can't understand. This is simple comprehension. Read and understand. We read it enough, we will understand. We go over it enough, we will remember. Right here, your most powerful tools, guys. I tell you that every single time. If you don't learn, you will not advance, okay? So what are we going to do? We are going to use our most powerful tool, our brains, and we are going to learn. We have our coffee ready with the D for dinero because we are about to get the dollars. That's right, guys. The moolah, the money. The cheese. I don't know any other money synonym. Sorry, guys. Throw them in the comments below. What is moolah, money, cheese, dinero, dollars, buckos? I don't know. I don't know any other money names. A wad? What do people call money nowadays? Skrilla? Is money called Skrilla? Let me know in the comments. I don't know, guys. I don't know very many words for money. Just money. And the dinero. That's what the D is for in Squealer D, guys. Squealer dinero. Okay. So today, my friends, since we are learning stock market survival, how to stay in the stock market, we are going to read Investor's Corner today. I don't know who Investor's Corner is, guys. I never read Investor's Corner, but Investor's Business Daily says, who wrote this? David Sato Chung. He says, and this was wrote last year, so it's not very old. In the battle for investment survival, you can learn a lot from judo. The first and most important lesson is that martial arts is the same for the stock market today, damage control. And it's especially true when the market is heading into a major correction, such as a coronavirus stock market crash that began on February 25th, 2020, as the IBD Big Picture column noted the same day. Judo masters begin. Guys, I got something to say about this. They noted the stock market crash that same day, February 25th. But if we're looking at a chart, we can pull one up right here. Yahoo Finance, our favorite place. If we can pull up a chart, let's just pull up anybody's. Let's pull up Tesla's. We're always looking at Tesla's chart. If you pull up a chart, like let's pretend this crash right here. This was a crash. Wouldn't you see it going down and know that they just announced coronavirus? So you'd be like, oh, that was a coronavirus crash. I mean, it's pretty evident. I don't think it's a big deal that somebody tells who said or who noted that it began to crash because, I mean, like everybody could probably see it. Somebody just noted it and that's noteworthy. I don't think it's noteworthy. But I mean, who am I? Judo masters begin not by learning how to throw, but how to fall. They practice this skill until it's as natural as breathing. And guys, that's for a lot of sports. I didn't know this, but when I learned about skateboarding, you also have to learn how to fall. So, gymnastics too. My daughter did gymnastics and they learned tumbling, which is how to fall. So, learning how to fall is very important. So, no matter how many times they're flipped, they can rise to fight again. Highly successful stock pickers go through similar training. They must learn how to cut their losses short. This means selling a stock when it's down 7 or 8% from the purchase price. That was our risk management yesterday, guys. Remember I said I'm probably going to bop out at 8% loss? That's why we're reading this today. Sounds simple, but many investors have learned the hard way how difficult it is to master the most important rule in investing. No one wants to sell for a loss. It's an admission that you made a mistake. But if you could set your ego aside, you could take a small loss and still be fit enough, both financially and mentally, to invest the next day. Cutting losses quickly prevents you from suffering a devastating fall that's too steep to recover from. So, the mathematics of investment losses. Consider the math. Say you buy a stock at $50. For whatever reason, it drops 8% to 46 during the next few days. You promptly unload it and move on. To reclaim that loss, you need to make an 8.7 gain on your next purchase with your remaining capital, which shouldn't be too hard. What if you hold on? Sure. You're sure the stock will snap back. Your research convinces you it's worth $100. So why get scared by a minor setback? There's one problem, guys. One big, gigantic problem. It's bigger than this finger. The market doesn't care who you are, what you think, or how much you believe in a stock. They don't care. So you can think your research convinces you it's worth $100. Guess what? The market doesn't care who you are, what you think you know, or how much you believe in a stock. If you lost 8%, that says you miscalculated, at least in the short term. A message that gets louder as the stock drops 25%, 37%. To get back even, now you need a 33% gain, which is much tougher to come by than that easy 8.7% gain. What if the market really doesn't like your stock and it slices it in half to 25? You don't need a calculator for this one. To recover a 50% loss requires a 100% gain. How many stocks did you pick last year that doubled in price? We didn't pick any, but guess how many we would have picked if we were trading stocks? Probably 0, guys. So, 2020 market crash and Intuitive Surgical stock. In the December 30th, 2019 edition of the IBD Big Cap 20, they're IBD. Are they IBD? I got to see. What is it called? IBD. That's why they noted it, guys. They said IBD said that same day. That's because they're big up in themselves. I was like, who the heck is IBD? That's them. That's why they're big up in themselves. Okay, you guys can pick up yourself if you want, but it doesn't matter. Okay. So now we're up to 100. We have to get 100% gain. That's crazy. So Intuitive Surgical ranked number 8 on the list. The stock has been famous for making some really strong gains after high volume breakouts in the past bull markets, including the one from 03 to 07. Yet since the end of 18, the robotic surgery systems innovator wasn't making a whole lot of headway. The stock peaked at 616.56 in the first full week of January 2020, then traced a mid 6-week flat base. Let's see what a mid 6-week flat base is, guys. We always need to learn. What do we got? Okay. Breakout. There's a flat base. Look. A 6-week flat base, guys. That means that for 6 weeks, it looked like this with a flat base, and then it had a breakout. There was a stock split, a 3-2 10-week moving average, stock split, flat base. And that's what he means, that it was flat based. Okay, well, that's good to know, right? Okay, so for 6 weeks, It was at a 6-week flat base. Add 10 cents to the highest price on the left side of that base, or 616.56, and you get a 616 proper entry point. On February 19th, just days before IBD downgraded the current outlook for stocks to uptrend under pressure and then market in correction, the stock cleared that buy point, but volume increased just 12% above its average. So remember, guys, we always talk about volume. Volume is how many people are trading and buying. So just because it goes up 12%, increase of 12% people buying isn't a big buy. Let's go back and look at that flat base and see what he's talking about, 12% on the other side. So right there, it was just a 12% increase in volume. See these volumes? It never went above the 120 mil, except for down here. It only went above a couple times. It's not a very high increase volume. Remember, these things show volume, guys. How many people are trading on that particular stock, not on the stock market. Don't get confused. So the next day, on February 20th, shares rose just 0.6 in below average volume for an emerging breakout that's a real no-no. Okay, so let's go back and look at it again. So we're looking at February 20. We can look at the dates too down here, guys. So right here. So you can see their volume was up a little bit. It was a couple times it touched right here. It didn't touch here, but over here where they're talking about in February, that's a 3-2 stock split that he's talking about. It rose up a little bit right here. Okay. We're learning, guys. This is all how you learn. It's okay to go back a million times. So, no wonder, as the market correction unfolded, Intuitive showed poor action. On February 24th, shares gapped down in heavy volume and fell through the 50-day moving average. That's a key defensive sell signal after growth stocks make a strong run. The next day, Intuitive fell more than 7% below the 616 buy point. Time to cut losses and preserve capital. By March, Intuitive Surgical dived to a low of 360, falling more than 41% below the buy point. So no big tech winner is immune to a big loss. Let's look at another example. Artista Networks. In the week ending August 24th, to 2018, the specialist in gigabit speed data switches used in data centers cleared a 31.77 buy point in a sloppy base. Let's see what a sloppy base is, guys. Where's a sloppy base? Flat base. A 15-week flat base. We know what a flat base is. It looks flat. You can see the breakouts are like odd. Like here was one and it's way up here. That's a breakout. Okay. So that base was also late stage and this high risk. Arista rose no more than 2 points above the entry, calculated by adding 10 cents above the base's prior 311.67. Then it headed south fast. Cutting losses of 7% meant exiting Arista near 289.95 in early September that year. The stock kept sliding. By the end of December, shares reached as low as 187.08, or 40% below the original buy point. If you limit losses on initial purchases to 7 or 8%, you could stay out of trouble, even if only 1 out of 4 buys delivers a modest profit of 25 to 30%. You could be wrong 3 out of every 4 times and still live to invest another day. So you guys could do the math. You see this? Digging a hole. Small losses are easier to recover from compared to big drops. So if you lose 8%, you only need 8.7 to recover it. If you lose 25%, you need 33% to gain to recover it. If you lose 50, you need 100. So if you lose 8%, that's only under, 17.4% to recover, right? But if you make 17.4%, if you make one out of 4, like they said, 125%, you just recovered those 2 losses and plus some, because 25% is more than 8.7 plus 8.7, which becomes 17.4. So 17.4 is less than 25%, right? You still have 8. So see how they said if you could be wrong 3 out of every 4 times and still live to invest, that means you still have money. You can do 3 of these initial losses, 8.7, that's how much you lose or need to regain it, times 3 is 26.1. So if you made a 3 of these losses and a 30% win, bam, you just won. Overall, you won. So a 2.50 batting average is nothing to crow about. But even the best hitters in baseball fail more than they succeed. Consider Tony Gwynn, who in 1999 became the 21st member of Pro Baseball's 3,000 hit club. That year, the former San Diego Padres outfielder finished the season with a batting average of .338. That means he was coming up empty nearly 2 out of 3 times at the plate. But he still hit 3,000 balls. Wow. You likely never saw Gwynn fret after grounding out. The same is true for successful investors. They calmly take a small loss and look for the next potential winner. So leave your emotions behind. Cutting losses with discipline will help keep your head clear when it's time to return to the market. A great paradox of investing is that the ripest buying opportunities occur just after bear markets, when the major stock averages have declined 20% or more. That's exactly when most investors who haven't cut their losses are reeling and don't want to be hit again. It's hard to think straight after losing thousands of dollars, but the market always recovers. What kind of shape will you be in? So I will tell you what kind of shape we will be in, my friends. We will be in an 8% loss shape because let us jump over here, check out the news, and then we are going to bop on to Thinkorswim, and we are going to practice swimming, guys. We're going to practice closing our trades with an 8% loss. By an 8% loss. We're going to practice our stop losses at an 8% loss, guys. So I hope you have your TD Ameritrade Thinkorswim open. Open it right now. If you are watching this video later, go open your TD Ameritrade. You just go right here and say TD Ameritrade. Yeah. TD Ameritrade. See it? It's right there. Go to it. You say, what do I want to do? I want to open a new account. Okay? It's right here, guys. Behind my picture, it says open new account. Click it. Okay? So, what type of account? We just want to open up right here, Thinkorswim. Log in. And that's all you do, guys. You go to Thinkorswim. You saw it on the side. And then you're going to open it up. And then you will have a Thinkorswim. Okay? That's what you're going to do. So we are going to look we'll look at today's most volatile stocks and look at a couple of them. So we have, I don't know what a lot of these are. Holy bumpy. Okay. Pharmaceuticals. Strong sell. What do we have? What's Centig? I'm just going to write a couple of these down so when we bop over to Thinkorswim, we have them. We can look them up. That's why when we're here, guys, you need your handy dandy little notebook. Okay? Make sure you get your handy dandy notebook. Okie dokie. What are we looking for? Petros Pharmaceuticals. PTPI. Net capital. It's a lot of pharmaceuticals, huh? And they're not worth very much. What? Aaron's Holding Company. Is that like Aaron's Furniture? Morphic Holding. I was like Morpheus from MedPlace. MedPace. Nymox. What does that say about our country? When we have so many. Look at these, 15 cents. Liquid Media Group. I never even heard of some of these places. It's crazy. It makes sense that they're the most volatile when I've never heard of them, right? Arrowhead Pharmaceutical. Federal Bank Corp. Well, that makes sense. Banks aren't always doing so hot, are they? Okay, we got a couple. We'll get Arrowhead. Arrowhead. Okay. It's got a couple written down that we can check out. And let us read the news real quick. They might have, really something important to tell us. Go to Finance Home and see what's new. Home prices post surprise jump, breaking 7 months of declines. The national home price rose 0.2%. Okay. General Electric raises full year profit outlook. Okay. Herbal Essence. What to watch for? Pepsi. U.S. drops amid weakening consumer demand. Frank founder moved millions of dollars out of J.P. Morgan after she was accused of defrauding the Wall Street giant and put it in Signature Bank. Huh. Of course they're moving their money around. They're scared. They want to lose their money. Nobody wants to lose their money, and when you have a lot. J.P. Morgan bankers met with Epstein. Why? This was supposed to be about Epstein. Continued to have meetings with the sex offender Jeffrey Epstein even after the bank decided to close his accounts. The Wall Street Journal reported on Friday. The banker, Justin Nelson, had about a half a dozen meetings between 2014 and 2017. They also met with Epstein after his accounts were closed to discuss other clients and introductions he could make to potential clients. What? Oh, he's got charges for horrible things, and let's make sure we can still get money with this guy. What is wrong with bankers? This guy was literally doing the worst thing to children and women we could think of. And the banker said, "That's okay, man. Let's still have our bank meetings. We need to talk about this money. There's all this money you're moving around." Yeah, that's what the S word trafficking means, guys. Moving a lot of freaking money. That's crazy. That's why banks close. J.P. Morgan deserves to close if they kept meeting with Epstein. Keep meeting with Epstein, you deserve to close. Crypto is dead in America. I guess we'll see. Because crypto, we can look at crypto, guys. Crypto isn't, I don't know, man. I don't know if you can say crypto is dead. Can you say crypto is dead? At this point, can we say crypto is dead? Because Bitcoin, right? Bitcoin is down, but it's up. Like, let's go to Bitcoin. Okay. Look at this. Bitcoin, this is where it started in 2018, guys. $9,000. $9,000. That's where it started 5 years ago. If you would have invested in Bitcoin right there at the open, 96.45, 5 years ago, if you would have invested in that and it went up, you know, it was really high. It was at $60,000 during 2021. And yeah, you could have sold then. But if you would have held on, let's say you invested at 94 or 96.45 in 2018, and you still held on to that one right now, it's at 27,327. That means off of one Bitcoin, guys, you would have invested $9,464. You would have made $17,682 in 5 years. That means you would have made $3,500 a year just for holding this for 5 years. So is it really dead? People made on average, if you just bought one. That's if you bought one Bitcoin for 96.45 right here. And you held on to it till today, 5 years. You would have made $3,536 a year. $17,682. 5 years, $17,000. You see how? I can't say that crypto is dead yet. It's not down. It's up. It might on its 1 year, it might look down from 1 year ago when it was at the height of the pandemic, guys. Everything was up. Do you remember how much TV you watched in the pandemic? Everything was up. Of course it's down from the pandemic. But if we look at the 3 month, it's up. If we look at the 1 month, it's up. It's barely down. Can we really say it's dead, or do we have to say that it's in a cycle? It's going to go up, it's going to go down, but as long as it's above this, your investment's still steady. I don't know. Is crypto dead? I guess we will see. Nicholas Gordon thought so. Enough to write this paper. I think that they just want to make crypto where the banks can make money and, the people that matter. They just want to control it. I don't think they're going to do away with it. It's too much money. If they can make $17,000 off something in 5 years, they're gonna keep it around until they can't make money off of it anymore. That's how I feel. But like I said, I am no master of money by any means. So before we go today, we are going to bop on to our Thinkorswim. So if you have your Thinkorswim, open it up, classroom. Open it up where on this side you can see how much money. Remember, that is fake money. It'll say delayed data at the top right here. Right there. You see it? Delayed data right there. Yep. 20 minutes delayed. It's real data, but it's delayed 20 minutes from the market. This is our level 2, and it shows the spread versus the spread, the ask and the bid. This is our live news, where it shows live news on what we are looking at. This is our MACD line down here. The volume shows the trading. And let us look at some of these ones that we were looking at. We looked at CNTG. Okay. Look at them. So they are near their high. Let's pull this up a bit. Okay, so the MACD line goes down, so I think we're on the downward jump with this one. See? Down. Let's buy while it's down. Let's buy this one. We'll buy market. What do we got on the spread? 199 and 197. Let's see what we do when we buy a market. We'll buy 100 of them for 197. That puts us at about 20% of our total overall. We're just going to buy at market and see what we buy it at. Okay, 193. And that's fine. It was way below 193. It let us have it way below. And sometimes that market is so helpful. So we buy it at 193. Now we need to know so I think 178 is our stop loss. So we put this here, edit it. And all I did, guys, was take 193 times 0.08. That's 8%, right? That gives us 15.4 cents. So if you take that away from 193, you get 177, so 178. So we're going to do a stop limit at 178. Or maybe we don't do I don't know what we do. Let us not do this. Let's just do, nope, we don't want to buy it. We want to sell it. Edit. Do a stop at 178. And that should okay, so we put it down there. We put the stop. And that is with our loss of 15%. So it should sell if it goes down that low. And now we have our stop loss in place, guys. It's just a stop. I don't know if it's the same as a stop loss, if it's going to act the same, but the only way for us to know is to try it. So, oh, they had a circuit breaker halt. What was the circuit breaker halt? You guys see over in the news over here, it says circuit breaker halt. It says, it doesn't say any more information. Well. We're up, guys, 850. And that's partially because they let us buy it for so low. What did we pay for it? 193. And it's our, no, what did we pay for it? We can look in monitor. You can go over here to monitor. It's here. We paid 193 for it. All right. Okay, that's the moving average down here, so we'll see. Let's go on to a different one and see. We'll leave that one going. We have our stop set. Oops, that's not what we want. Yep. Veros Therapeutics. Let's see what they got going on here. Zoom in. Okay, we can buy one of these too and put a stop, so we can buy it at market. What's the spread right here? We got a 101 and 109. Let's buy market and see what happens. And see what we get it at. So we know what our market prices will sell at. So see, we bought this one at 113, guys, because the spread is so big. 13 over here, 27 over here. So we ended up paying 113, which lost us $5 off the bat. You guys see that? That is why we don't use market trades unless we're just, right now we're practicing, and that's okay. It's good to know, you know? So we are in at 113. So we got to get out at 104. 104 is our limit here, guys. So we will put a sell. Let us try. The last one we put, what, a stop or a limit? A stop. Let's put a stop limit. I don't know if you put these both the same. We're just trying this out because I'm not quite sure. Said I couldn't put that. We're going to try it. Let's check what we got going on over here. So this one's still climbing. We are practicing our limits, guys. We got a stop limit here. Hopefully that stops it if it hits. Not sure what we're doing here, but we're doing something, okay? And then we have this other one over here. And this one is still climbing up. We got our stop, just a regular stop down there. Okay, it's all looking good, looking good, looking good. We got two going. Let's do a third one. Let us do this one, Petros. What do we got going for Petros? Zoom in on up here. Okay. Let's see what the spread is. 560 and 551. That's big. So let us try a market limit order. 555 is the current right now. 552 is dropping down. So let us buy at a limit order, and we will pay $554. $555. We'll pay it. It's just bopping around, guys. Let's do. I changed my order. $555. So we put the limit to buy here at 555. It dropped to 554, so we can see if we are going to sell, if we're going to buy. We got our working orders here. Okay, we sold. Which one did we sell? Oh no. We were up on this one. What happened? We sold wrong, guys. We sold wrong. Filled orders. Let's see. 100 to close. Stock sold at 1775. Why did it sell? We did a stop at 1775. I'm so confused. What do we buy it at? So if it was at 252, why did it sell? Why did it sell on us at 195? I'm so confused. Hmm. I'm gonna have to go back and watch the video. We shouldn't have left out of it. I don't know what happened. We had to stop. And then it just hold on. Entered at a stop price below the current market price. The stock drops to a stop price. The stop order sell is triggered and becomes a market order to be executed at the market's current price. That's why. So it hit. But it was so far up. It went down that fast. I am so a stop order is just to sell at market price. Okie dokie. So we had a stop to sell at 175, but the stock wasn't at 175. It never dropped to 175. That's where I'm confused. Because it sold it at market? It just doesn't make sense because look, it dropped to 190 is the lowest it dropped. Even here it dropped, what is it? 191. The last time it dropped was way back here and we weren't even in. It didn't drop to 170, so it sold it at such a low market price that we lost $16. How crazy is that? Let us try one more time. What we'll do, 94 and 93 with a huge, people are bidding versus asking. So, you can see way more selling than buying. That's crazy. Market orders will craze you. Oops. Okay, so we have a stop limit order here. If it hits 107, let us check Veri out because we don't want the same thing to happen. We got to be smarter than that. So it is down here by our stop order, our stop limit. But it's right below the resistance. You see where it's hitting? It's right below that. So we have ours at, what is it at? Come on, pop up. 107. So it's at 109 right now. We'll let it play with this. We lost 250. Not a big deal. Okay, so let us go back over here to Petros. What do we got on Petros? We got one to buy. We'll buy a 555. It's a little high right now. So if it bobs back down, we will buy that. What else do we have? AAM. Let's try a different one. Okay, so the Aaron's Company. Aaron's, where you can rent furniture. Okay, well, it's above the moving average, but it looks to be dipping back down below. So if it's barely moving up to the moving average, moving down, moving up, moving down, moving up. Let's try morph. M-O-R-F. Oops. Okay. Morph looks like it's on a downward spiral. Look at it. Moving away from the moving average. Down, 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 down. Okay, well, morph doesn't. Arrowhead. Okay, what do we have here? Got a little crossover under the moving average. Okie dokie. Let us come back. What do we got going on? Nothing going on here because we sold too low because of what, guys? Market orders. What do we learn about market orders? Market orders always rip us off. So you got to be very careful with the market order. That's right. Here's BuzzFeed, guys. BuzzFeed is freaking 53 cents. What? Let's check. What do we got going on here? We still own it. It's got a stop limit. Oh, look at it. Look at it. It's trying to go back up. Look at it trying to raise up there. Come on, little guy. Go on up there. So that stop limit is to protect us and sell. And we could sell also when we get high too. We could take this stop limit out and just sell, just sell. Like right now. Oh, look, here it comes back down. Guys, ask price is, the spread is pretty even, but I wouldn't sell for a market price just because you don't want to get out and, find out that you messed up. Okay, so let's see if we can do one cancels the other. Okay. I don't know how to do it. We'll have to figure that one out and do it next time because I don't know what I'm doing. Oh, look at what we did. What did we do? He filled an order. Which one did he fill? He bought PTPI at 538 with a limit order. Let's go check that out. PTPI. Petros. What do we got on Petros? We bought it at... Okay, well, you know what we can do? Let's sell it at 558. Let's sell it. Okay. I didn't know what that meant, but run it. Let's sell it at a limit order at 564. 563. Sell it. Now it's 562. Okay. So let's just see if this fills. See if anybody wants to have it at 5. What did we say? 563. It's a limit order, so it doesn't have to get filled, remember. Let's head it up. Does anybody want ours? Come on, guys. You can have it for the low, low price of 563. We should be able to put like advertisements on there. Like I could put my face and be like, come buy our stock, neighbors. 66. Come on, people. Buy this stock. It's a fresh young stock ready to get bought. It's kind of flattening out across. They're scared. They're scared. Here we go, guys. Come on, look at it. Look at it going back up. Don't you want it? You can move this up too. See? See how easy that move up was? Now you sell it at a little bit more. That's right. 66, guys. Price is going up. Prices, what did we do? Okay, 66. And 70. So we have it, our sell sit at 66. It's 69 and nobody's bought. You see how that works? That just there's not enough volume of people to act who actually wants our items, you know? They're asking at 68, so I'll sell them at 68. We got ask price at 568 times 3, the bid, and the ask is at 571. So So here we are here. Somebody wants this much. So we're right there trying to sell, trying to sell. How many people are trying to sell? 2 people got. Staying up there, huh? Look at it. More volume, more people. It's at 82 now. You move your stop loss up so you lose less. Nobody wants it. They don't want to have it. They don't want to buy it. They said, keep your PTPI. I wonder what would happen if we sold at market right now. Should we sell at market and see if we lose all of our stuff? Let's move this back down. Moved it down. We're good anyway as long as we stay. We paid $5.38 for it. $5.38 times 0.08 is 43 cents. So $4.95. We have to sell out by $4.95 or else we lose money. So at 563, we are far from what we need to sell. Man, it's dropping like a dog. Let's just get out of it and sell it at, let's put 550. Maybe these guys want it at 550. Yay, we sold it at 560. We did it, guys. Somebody wanted it. Look at us. Look at us sellers. We made $22, which makes up for that $16 that we market sold. Let's go check back out our Very. Where is it? Very Therapeuticals. We have it at a stop limit at 104. That's our stop loss at 104. We're still up here. So, looks like we may go back up a little bit. We'll think about selling, but at least we have our hard limit down here. What else do we have out and about? We are out of this one. We are out of this one. We can tell because zero quantity. So we just have one right now to get out of before the end of today. Let us see. It's just the Very. So we did it, guys. This one, we knew we put a stop loss and we sold it as a market, and the market cost us $16. We were up on this one. We were up like $13. So we lost the up and we got a profit loss of $16 today. This one, we watched more closely. We did not do a market sell and we got $22 gain. So let us check Very and try to close that one out positive. We put a stop limit here. It hasn't went down there yet. So it hasn't sold. So we are still cruising along on our very before we pull out. It's way back up here though. This is the MACD line across down up here, but it's it's on a little positive run. We got some volume here, people trading, buying, selling. All right. Where are we going to go, guys? Are you going to go up? This one's little too, guys. We're going to remember this one's only $1.12, so the volume is a lot less than the one we were just on. That was this one? No. Well, it was just in PTPI, 550. When they sell it a little bit higher, it's more people. You can see higher volume. 300,000. What is this guy? This Very is $1.29. Way less people down here. What do we have? Like 900,000. Right here, there was a lot of people. This is the beginning of the what's it called? Market. So it's always always real volatile at the beginning of the market, and you can see that because the market opens at 6:30 here. You can see all this volatility. All those colors are trades, guys. So you can see how crazy it was. It started at 6:30. Come on. 6:30. So, let me get back over here. What's happening? There we go. I don't know why it's stuck. Having technical difficulties. Sometimes you just have to bot back out and bot back in. Okay. Before we deal with this, let me just leave you guys here. I'm going to run to the restroom really quick, and when we get back, we'll decide what to do with this. You think about it while I'm gone. Alrighty. Get this hair out of my face. Coffee's cold. Okay. So it didn't do much while I was gone. My hair's wild this morning, guys. Wild. Okay, well, what do we got here? We got it crossing back down. Across. It's at 113. What do we pay for this little baby? 113.5. So 104 is our 8%. Well. What should we do, guys? What should we do? Should we just get out of this? Let's just let us just try to sell at, we'll stop this and we'll sell a limit order at 135. Let's see if we can do it. Or 13.5, I mean. 13? Let's try it. A limit. And remember, it doesn't have to, they might not necessarily sell. We paid 13.5, so let's put 35. Oh, 13.5. Let's see if that sells, folks. Why isn't it? What's happening? I don't know what's happening. Why wouldn't it accept my price? Weird. Well, we'll try again, won't we? Limit it. Let's try it. I don't know. It was taking me so long. I don't know. Well, we put it in anyway. Let's see if we can't get rid of it before we go. It's not looking good for 113. See how that MACD line is dipping down again below the other line? That's pretty typical of when something goes lower. When the candlestick goes lower, it's going to go lower. Because I think this is the moving average. This is 112. Well. Dropping down like a fly. Down. We gotta put it back to 104, guys, because that is our 8% loss. Remember? So what we'll do is just sell it. Let's sell it here at 109. Oh. Okay. I get it. It can't be point something. 109. Just flat. Oh, my word. A limit order at 109. That's 110 right now. Move that limit order down. I don't know what's wrong with this thing. It's telling me all kinds of weird things, huh? That is not available. Well, it is available. I literally just did it. There we go. We got out at 109.5. Lost $4 on it. That's okay. That's okay, guys. This is learning, learning, learning. We do not care about losing. So today we lost $20. We gained $22. We came out $2. $2 day. Not bad, guys. Not bad. I had a great, enjoyable time. We learned to never sell on the fly with the market sell because you could lose $16 even when you're up. Right? We were up like $13, guys. $15, $12. I don't remember. We could look back. But we were up, and now we're not. So market orders, guys. Market orders sell whatever they can get. It's like a yard sale. A market order is like a yard sale. Don't sell to a yard sale unless you know what you are doing, because you might lose a lot of money. So that is it for today, guys. We are going to do more, of course. This is just the beginning. We still have to learn how to use all those other orders with our risk management. This today was trying to keep our risk management in mind and not lose over the amount. This was an accident, but these ones we did good. Here we stayed, we sold at 110, and as long as we were out by 104, we did not lose 8%. Out of the trades today, what did we trade today? We lost, hold on, guys, hold on. So let me bring out my handy dandy calculator. Everybody needs a handy dandy calculator. So we did $2 in gain. So we had 0 loss today, guys. And that is always a good thing, right? We didn't have a good gain, but this is not about that yet. We are just learning. So that is it for today, neighbors. I will see you guys tomorrow, same time, same place. Be there or be square. Have a wonderful rest of your day. If you enjoy gaming, check back throughout the day or check that notification bell and get notified when we go live with certain games. We play lots of different games and we play live for you to enjoy with us. So come check it out. If you don't want to, that's cool. I'll see you back here tomorrow. If you can't watch when I'm live, that's also cool. I record them and I put them in a folder called Stock Market Learning. So you can learn at your will as fast as you want. You can watch the videos a million times to get it stuck into your brain. So have a great day, guys. I am going to reheat my coffee and enjoy it. And I hope you also have something to enjoy that is safe. Have a beautiful day. Bye, neighbor.